I'm happy to meet everyone at the roundtable dedicated to future of banking. So we are going to have a unique and really exclusive discussion because nowadays maybe there's no banks on blockchain, but some parts of business lines. So Ranko is going to be a moderator. So please, let's start.
So welcome everyone. So it's a true pleasure for me to moderate the panel on the future of banking. So I'm supported in this effort by some expert members, people with background from the banking themselves and also from the VC world. So the way we envision this panel to take place is we'll have first 3-minute introductions from all of the panel members, and then we'll have a open discussion with some questions, and then we'll delve into taking some questions from you, from the audience, on the banking space. So with that, if we could have the slides from Jouko, so then Jouko will be talking for 3 minutes.
Okay, thank you. And first of all, I have so much material that I'm not going to go through all details, but actually this will be available on our website also later today or tomorrow, so that you can go to check the details. But this is a very short introduction what we are thinking about the banking services. So that we are basically a holding company. I would say that more holding company than investing company, so that we have totally 10 fintech companies, and also some of them are working with blockchain in our group. And we work with many new services and new companies, but we have also many traditional customers, including banks that are using, for example, our technology nowadays. So that my first point, what I often want to say to banking people is, it's interesting to compare the situation, for example, to telecom or media industry, because there have been quite a lot of changes in those industries during the last 20 years. And for example, compare what has happened for telecom carrier, so that maybe you can learn something what could happen for banks. And it looks like that at least the main media and telcos are still basically alive, but at the same time, I would say that the new companies have taken most of the new business. So that in that way, I think that it is not so promising for the banks. And I would say also that if we think, for example, banking IT and many services at the moment, banks have hundreds or thousands of different services. So that some of them are most probably relevant also in the future, but there might be a lot of areas that some other companies can take over the business, because banks cannot handle all business in the future. And one learning what I want to remind always banks is that you cannot own customers, because I remember how media companies, how telecom companies, they used to talk 15 years ago that people are anyway going to use their services because people trust them and they own customers. But no one can own customers. You must have all the time services that are relevant to people. And another point is that I think that banks must basically make decision in which area they want to focus, and there are areas that they cannot do it only in-house. They must find their partners. And one very important point is that they must develop services in the future based on the customer needs, not based on their existing IT or their existing organization or their existing products. And it seems to happen easily that you start to think the future only based on your existing things. And anyway, software and data is coming and taking over this business also. And for example, I think that lending is an excellent example where data analytics, AI, and basically better utilization of the data will change the lending market totally. Not only how to work in the customer interface, but also in the secondary market, how to invest in loans, how you can have real-time data from loans and so on. And one more point is that finance will be integrated to many other services. In many cases, people don't want to go to use finance services. They want to buy house, they want to buy something else, and they need money. And that's why it will be integrated. and it will be available everywhere. And I believe that tokenization is going to come to many assets, also for more liquid assets. And this is the last one. This is actually one of our companies that offer finance back office as a service. And the main point is that the ecosystem is important. That, for example, if you make blockchain service, you cannot ignore KYC and many other components. They are still important also in the future. So that's very briefly my introduction.
Thank you, Jouko. So next one is Joshua. And Joshua, if you could briefly introduce yourself and again the 3 minutes about your venture.
Sure. Does this work? So my name is Joshua Hawley. I'm the founder of the Blockchain Advisory Foundation in Mauritius and also the co-founder of EVEST Bank. Do we have a... Sure. So I think I'd like to start the basic idea in terms of the future of banking is legacy system integration. So we talk about new technology and how does that integrate with legacy systems. And that's, I think, the future of banking. Banking's definitely not going anywhere, but technology is driving the future of banking. And so what we've done is seek to integrate card services with wallets. We're a current MasterCard service provider. We've developed a wallet that's a blockchain agnostic wallet that integrates with MasterCard prepaid debit card system and then allows for payments in crypto and fiat as well as peer-to-peer payments. So I think, and we've had this discussion amongst the panelists, your traditional branch bank will probably disappear in the near future, and then we'll move to like VR, a VR model. So EVEST is the idea of EVEST is to integrate the legacy system with the new technology. And okay, here we are. So basically what we're doing with EVEST is traditional offshore bank services, high net worth investors, private account management, current account management, and then private key storage, vaulting services, et cetera. So you've got the traditional, does this work or are you gonna? It doesn't work because of the PDF. Okay. Okay, please tell us. Okay. So basically right now the need in the market is significant because as crypto holders, can you get a bank account, particularly if you're in the crypto business and you say that you're a crypto business, when you go through KYC, 99% of banks will not open an account for you. This is our personal experience. So as a MasterCard international service provider, when we do KYC on our customers, we have to tell our customers that not to use the word crypto, not to integrate blockchain, get away from anything that says bit or ETH or anything of this nature. So right now we're talking about roughly a $300 billion market, crypto market, and 90% of the crypto market doesn't have access to traditional banking. This is problematic, right? So the future of banking has to be integration, legacy system integration with blockchain technology. Now what we've seen, and particularly with Visa and MasterCard, is they're looking to monopolize the market. So the incumbents are looking to control and dominate the technology, and they're buying up. Like our CEO, for example, is at BNY. And he told us that they're actively buying up blockchain ventures. Why? The regulation doesn't exist now, but the future of regulation is going to integrate blockchain technology. So the banks are moving to integrate blockchain technology right now. That's a given. We know that for a fact, but regulation actually hasn't caught up to that. So the market need exists. We know from the last BEF event in Singapore, we personally roughly identified about $150 million worth of business just from that BEF event, where they cannot access traditional financial services when it comes to liquidity, OTC trading, right? It doesn't exist in the market today. So it's definitely a necessity, and the banks that are addressing this now will be market leaders in the future, and that's what we intend to be. So, thank you.
Thank you, Joshua. Thank you, Joshua. So next person is Tony from Singapore, and he's uniquely positioned. He has both a leg in the traditional banking world and also a wealth in some new blockchain ventures. Tony.
Yeah. Hi, my name is Anthony. You can call me Tony. I'm still probably the only one who still work in a bank. I've been in banking for more than 2 decades and still working in a bank, but I am in transition. So I'm here on a block leave. I told my boss I'm going to America. Full stop. He didn't want to ask why, but I think he knows. Okay.
He's watching you online.
It's not recorded, right? Anyway, my thoughts about banking or future banking is really from kind of insider kind of view, right? I'm working on some strategy and innovation projects within the bank as well. So we are planning closing down branches, and we actually have a roadmap to close down X number of branches in the next 5 years or so. So in the future, we won't have that many branches, probably cut down 90% of the branches, and we'll equip them with robots and AIs. We already named a few robots, but right now the mixture of the 2 genders. So just to make it gender neutral. So we've got two types of bots that will be used. Starting with the chatbot, but eventually we put in the robot like what you see in Sophia in the future. So these will be put in the bank branches, so to speak. And when you walk into the branch, you won't be doing normal banking transactions, but you will be doing something much more complex beyond buying not even a structured product that can be done by a robot, a Robo Advisor we call it, right? So in the future, there won't be that many bank branches, at least the bank that I'm working in. And of course, banks now learning from the Googles and the Amazons and all that. So UI and UX are getting more and more important, and more emphasis on, I mean, all of you use banking services, right? And the UI UX really sucks, right? So it just really nothing compared to the technology company. So banks are slowly realizing that this is one of the things that they need to focus on. So if you have good UI UX people, right, keep them, because if not, somebody will hire them. And so in terms of a Robo Advisor, it will be getting more and more important, because that's the emphasis, and we'll be, at least in the bank that I'm working on, we are working more on this AI and analytics and stuff like that. But more importantly, a lot of banks will move from a principal kind of position to be playing an agency role, because you can see that a lot of banks, they are exiting certain businesses. Stanchart got out of commodities businesses because they feel that they cannot continue to be profitable in that space. So more and more banking will play the role as an agency, and they will be better and better at it. So some of us think that maybe a lot of fintechs thought that it can kill the banks. Unfortunately, I think the banks will continue to stay, and they will evolve. Because if you think that banks will be just disappear because some fintech managed to do some peer-to-peer lending, then that's not true. Because if all of you know banking requirements, Basel III, now going into Basel IV, FRTB, SACCR, any of the fintechs can handle all this? No. So I just want to end with one slide. I just want to point out that there's a hype cycle. Can you show this? I just want to end with that. So I just want to frame the frame of mind, because like even Ants Financial, now they can't do that normal P2P lending, because the new requirement that came out, they can't do that anymore. That part of business is gone, but the banks will still be around because banks are regulated. So we just need to bear that in mind. So if you look at the innovation hype cycle, at least from a trading world where I come from, I'm from Treasury, global markets. So at least for IoT, machine learning and all that, we are still in the peak of inflated expectation stage. But for blockchain workflow applications, it's reaching that trough of disillusionment. Is blockchain really useful, or is blockchain really it? Banks are still testing them. The only bank that is starting to use it for real transaction is HSBC. In May, they issued the first LC transaction, or soybean transaction. So we are going through that hype cycle. I mean, this Gartner cycle, you can Google it. So that's how I feel banking as the future is.
Thank you very much, Anthony. So next in line is Krzysztof, and he'll give us a perspective from the Polish crypto banking initiative.
Yes, hello, my name is Krzysztof Piech. I'm a university professor. I'm in Bitcoin for over 6 years, and for the last 2 years I mostly help accelerating blockchain projects because I run blockchain technology accelerator. And I will tell you at the end of the presentation, which is very short, the project that we supported for the last few months. But all of that started 2 years ago when we started to think if it's possible to establish a bank that could be based on a blockchain. And it's far from being easy project. It's much easier for the bank to integrate cryptocurrency than to build something serious on the blockchain technology, and I can tell you later on why. But anyway, we believe that it can be done. I mean, such innovation can be done still in Poland. Why? Because we have very good retail banking sector. Most of the innovations are already there. Some banks are testing blockchain technology, even if they don't say that publicly, but I know the market, I know that some of them even use cryptocurrencies, although it's forbidden officially. But anyway, they do so. One of them even is doing some mining to use some of the inventions they already introduced. Moreover, we have almost 800,000 Poles that are able to use Bitcoins. Actually, they have cryptocurrencies, so that means that there's a very big, large amount of people that can adopt the new technology quite easily. It's about 3% of Polish adult population. So this is a good starting point for the future. And then, but what is missing in this whole picture? This is not the problem of IT talents, because we can find them in different countries. It is not the problem of money, because the world is flooded with money, with zero rate policy, 0% rate policy. The money is almost everywhere. But what are the other problems? I mean, banking sector, apart from pharmaceuticals, medicine, military sector, banking sector is one of the most regulated one. So now try to imagine the new technology that is very difficult to be regulated and so on, and it must be introduced to the traditional banking. It is very, very difficult. That's why in a project that we develop at the moment, we twisted that and are trying to do it in a different way. And the transition that we are speaking about, the introduction of digital money that could then smart contract be built on that. It is this kind of a tradition. If we could imagine the transition from the banks that were using cash to the banks that are using electronic money. And then we are speaking about the next transition that is ahead of us. But it won't be Bitcoin, it won't be Ethereum, it won't be any cryptocurrency that is nowadays, because they are speculative nature. What I counted in my research, I did some calculations, because everybody in the industry believes that if Bitcoin adopts, if it is massively adopted, that the Bitcoin price will stabilize. Actually, the historical data doesn't confirm that. There is no such a relation that if the price of Bitcoin is going up, or if together with the adaptation of Bitcoin doesn't mean that its price stabilizes. Quite contrary. So anyway, in order to have smart contracts, for instance, used by people on a normal currency as they use in a grocery in everyday life, Bitcoins and Ethereum and some other tokens are not for that, because they are speculative in its nature. That's why people need stable tokens. That's why they have to build fiat-based money, and I call it digital money. I'll be finishing soon. So some of the, we have already some of the nice examples in Poland. For instance, this one was announced just a few days ago. One of the most innovative Polish banks has partnered with one of the most innovative German banks, Solaris Bank. So they will be building quite new initiatives also to some extent on blockchain. So what we need in order to make a kind of a revolution in the banking sector, because I still believe that the banks will survive, although they must adapt to the new situation, but the banks already adapted to e-money. Now they have to adapt to digital money. And what we need is not a tether, we need another kind of digital money that could be to some extent audited by the central banks, but it shouldn't be introduced by the central bank, contrary to some discussions that are happening in different countries. And this is what we are trying to do in our project, which is not publicly available yet, although we already have the domain. We'll try to build the digital money for the banks, and through the banks we'll try to introduce this money to the people. First, we know the needs of people on the market for many years, and we also have people on board who are former bankers, and we are working on that. I'm trying to click.
Also, Pavel. Pavel is giving us a totally different perspective, a very impressive track record, as we see, with investments in Telegram.
Thank you. Yes, my name is Pavel. I run a venture capital firm here in San Francisco called Mindrock Capital and also GVA Capital. We have about 200 million now under management, but growing very fast. And most of the recent investments go into crypto space. So we're large investor in Telegram, Hashgraph, Storage, and many other projects. And I really have a completely different perspective. I just came from vacation in Ecuador, in South America. And can you imagine the whole country, like a decade ago, just gave up on their currency because they couldn't keep up with the inflation. So they said, screw it. And they replaced their currency with US dollars. They really use metal dollars and US cents as a payment tool in the whole country. Well, what a use case for a new cryptocurrency or a new technology that could replace this. And there's so many places out there. Like if you have a bank account and a credit card and a credit score, you're lucky 10% of the global population, or maybe even less, right? The rest of the people don't even have access to the simplest and basic tools. If you're a freelancer in Vietnam, you will probably wait 2 months and you will pay 30% of your income just on banking fees to get paid, to get cash for what you earned already. So I believe the blockchain, so banking for this unbanked is probably the biggest and most visible use case for the blockchain technology. And there are hundreds of startups already in this space, but there's a need for 1,000 more. And the only thing that can move these big banks into the space is fear. If they see that this is working independently of them moving into the space, then they will start doing something. Until new startups come and prove that this is working and show the use case, this is going to be useless conversations for the banks about integration of legacy systems for the next decades. So we are hunting for these new ideas, for this kind of innovation, for the real use cases that can bring banking services to new populations and also to allow for easier and simpler way to do even the basic banking services for the world.
So thank you, panel members. So maybe to kick off the conversation, so the first question is that great companies are established on finding solutions to the secrets, and so in terms of the looking for the secrets, what is out there in terms of underserviced customer needs that have not yet been thought of, but that you might have come across, or that you thought you might already share some, or might take some of the veil of, in terms of underserviced needs, and that new emerging companies might try to cater to.
I believe in very basic services. I think now is the time when technology is there and is being tested with small groups of people. Now the main barrier for innovation is usability. You know, those usability guys you were talking before, just putting antenna and battery together into an iPhone is a huge innovation, right? There's a big difference between inventing antenna and bringing iPhone to the market. So now antenna is already invented. Now somebody has to put these pieces together into something that, you know, my grandma can understand and use when she's buying groceries in some other places in the world. But everybody in the world has mobile phones. Everybody in the world has internet connectivity. All the technology is there. It's just putting these pieces together.
You asked what people actually need. This is something what we observe in Poland among the younger generation. People need to send money fast and cheap. That's simple. If I, for instance, were to send the money to China through traditional banking sector, it could take days. So what I did, I checked with my business partner. He accepts bitcoins. I bought bitcoins and sent them. That took together with transfer to the Bitcoin exchange and so on. It took a few hours only. It's still too long because of the first onboarding process. But this is something what people need to spend some time on Saturday night and send money to somewhere else, to eBay or wherever, within seconds. That would cost cents only.
But you know, that taken for granted. But this is not already being taken care of by Ripple and Stellar. So again, you know, Ripple being represented by a syndicate of 100 banks. So, but I was more thinking about individual initiatives. So again, as you emerging companies and new companies in the fintech sphere, what is it, you know, that you have identified as being key needs, customer needs that are underserviced? So apart from, maybe I should introduce at this space, you know, where we see, if you look at the traditional banking services that are being catered to, so you have payment services are being taken care of, custodial services are being taken care of, you know, the for-fee services are being taken care of. But, you know, you look at deposit taking and loan procurement, especially fintech on blockchain, that's something still underserviced as an ID.
If I may comment, I see two types of services if I simplify. One is that there are existing services, but maybe the current implementation doesn't make sense. I talked with one banker some time ago, and he asked that, do you really believe that this fintech and blockchain is going to change their business? And I asked from him that, think about normal bank account. A person gets one salary payment a month. He makes a few payments and some card transactions. Do you really need $1 billion IT system, 10,000 people and 200 offices to manage this kind of account? So that is one example that there are services banks are doing, but I would say the implementation doesn't make any sense. Then there are maybe new components, like, for example, emerging markets. We have seen Vietnam, Indonesia. They are basically starting to offer fintech services when people don't have any finance services at the moment available. And then one more category, as I mentioned also earlier, is that how finance could be integrated to many other services when you are buying house or when you basically are doing something, and the finance could be like plug and play component inside that one.
Okay. Maybe moving, Joshua? Or?
I'd just like to comment that I think the biggest issue in banking today is regulation. So even though we may have identified a necessity, without regulatory policy in place, it's very difficult to implement these new technologies.
I actually don't see an issue at all in regulation. I mean, I come from the venture business. We always invest in something which is not legal at the moment when we invest, right? Like Uber is still illegal in most of the countries. Airbnb is illegal here in San Francisco, right? And you can think of many examples like that. This regulation is just the state of art. It's the representation of the rules of the game. So the only way to change this is to do something, show that billion people needs and uses this, and then the regulation will have to follow.
Okay, I just want to respond to something not really regulation, or maybe regulation is not ready. I think from what I see, the reason why banks, they are not really embracing cryptocurrency full force, because number one, I actually went to the head of compliance officer in a bank, and kind of quizzed her about blockchain and Bitcoin and stuff like that. So my conclusion is she doesn't really know. So if compliance people don't understand blockchain and Bitcoin, and they only hear about rumors from Warren Buffett or Jamie Dimon saying negative things about it, so the conclusion is, yeah, this is bad stuff, don't touch it, right? So therefore, I'm maybe appealing to fintechs or maybe entrepreneurs. Think about reason why banks are not fully embracing Bitcoin or cryptocurrency. It's not because they really want to kill blockchain, want to kill Bitcoin or whatever. Very simple stuff. Do you know how to do KYC on blockchain cryptocurrency? I know how to do KYC AML checks on fiat. Do I really know very well how to do chain analysis, blockchain analysis and stuff? I understand how it works, but you ask me to do it, I have some apprehension. So within the bank, there are just too many things to worry about. And to onboard a company that is fully on crypto, and that particular company is not able to tell you, this particular coin that I have back to the Genesis block is untainted, is clean. If you can't tell, then I can't tell the source of funds. So if I take your funds and I got into trouble, my banking license is in trouble. So what's the easiest thing for me as a compliance officer to do? Reject.
Krzysztof?
Just a short comment. Within our accelerator, we have one project for Polish tax office about AML and so on. That's why I know that we are identified within this project at least 10 startups working on AML for cryptocurrencies. One of these startups already is launched, and it's from Poland, and it is partnering with the largest Japanese bank who wants to create their own cryptocurrency pegged one-to-one to Japanese yen. But anyway, they need to have the AML system for that. So this is actually happening, although it is very difficult for people from traditional compliance department within the banks to understand that it is actually possible, although quite complicated.
Okay. So moving somewhat the subject matter right now. So for those of you interested, the World Economic Forum has issued a fintech report about it's pretty comprehensive in terms also of emerging trends. One of the trends that have been highlighted is about the move from systemically important financial institutions to systemically, technically important financial institutions. So with FANG institutions moving into the space. So what would it take from the Googles and the Amazons of this world to take inroads or make major inroads into this fintech blockchain space?
Once again, I come from the venture perspective, and the venture perspective says they're not going to do anything until they have the fear. And they will have the fear when they see somebody else is taking over. And then they come and they try to buy them. So it's probably going to be the same Bank of America brand in 20 years, but the actual product that will stand behind the brand will be a compilation of 20 startups that they will acquire in the process and build into their products. So it's the same brand, but it will be built on completely new technologies that they acquire and replace whatever they have now. I think that's the only way it can develop.
I would say also that I don't think that anybody come to replace banks, but what happens is that there will be much more niche services for different kinds of things where they start to compete with banks, and maybe they come first to the areas where the profit is the best one, and then we basically see the development that banks are really forced to work also with different kind of services, and I believe that somehow it goes to the platform economy, what is happening also in the finance, but it's still hard to say that who are going to dominate those platforms.
I just want to respond to the Amazon and the Google and all that. Every one of you heard of Ant Financial, right? Ant Financial is something like a Google or Amazon. I call them not fintech, they're tech fin, right? They are very good in technology. They have gone into the fintech area. They have been doing P2P lending and grew so fast, unregulated. So up to a point that now Chinese government is saying that, hey, you know, you are becoming too big to fail because the shadow banking is ridiculous, it's so big. And Ant Financial actually has a very big influence on the Chinese lending market in the P2P world. So they came up with the regulation is you guys can't really do, or you are a tech company, right? So tech company is not regulated by CSRC or whatever. So you can't lend to any one individual more than 1 million RMB or companies 5 million RMB. That effectively removed the big chunk of the P2P lending business from them. So back to the original statement that I made, that the banks will continue to be around because central banks, governments, they need to control. What they don't like is really money laundering and people using certain new technology to do illicit activities. So I think to understand where central banks are coming from, they're not control freaks. They just want law and order. They want to be able to control, manage fiscal policies and stuff like that. But they want to manage it in an orderly way so that people can't take advantage of the loopholes. So when you understand what regulators are coming from, then maybe we should try to self-regulate and do something that what the banks are doing is really not bad for the society. So can we do something in that space? I mentioned KYC, AML, and stuff like that. If you find something, if you do a blockchain analysis, you find some bad guys doing drugs and things like that on a blockchain, what do? You just leave it, or you go and report them? I think I'll report them. So.
Ladies and gentlemen, let's to be in time frame and let's change to a decentralized Q&A discussion. So any questions from the audience? Okay?
Sure.
So yeah, the first.
So I've noticed as someone who used to operate a Bitcoin exchange that was just for institutions, and now someone who's building cryptocurrency for a company that's about to be a publicly traded U.S. listed company. I've noticed that a lot of large multinationals that do treasury management in multiple countries and have to deal with banks in multiple countries are starting to buy cryptocurrency of their own accord, kind of against the advice of their bankers. They're just doing it anyway because it for the transfers of $1 to $10 million or so, it's just better than anything. So my question is, how big does that trend have to get before the banks, from a sense of even just keeping their treasury management deposits, start opening up cryptocurrency OTC desks or similar?
Well, again, I think it goes back to, with existing banks, at least it goes back to policy and regulation. So unless and until, for example, with BNY Mellon, they have blockchain systems as backup for their data management. Legally, they are required to go to their servers first, and then the blockchain acts as validation of the server system. Right, I'm leading into that. So when it comes to cryptocurrency trading with banks in particular, I'm not talking about new technology or new innovations, but banks in particular in OTC trading, unless there's policy in place to allow for that legally, lawfully, for those existing banks, those existing operators, right? Where can you go to find an OTC trading license, first of all, right? We've been trying to create that in Dubai, for example, for the past 3 months. It doesn't exist. So there's no place where you can go and get an OTC trading license specific for crypto. So as an there's guides, but
that includes registration. Registers virtual currency business.
Right, but as an OTC trading license specifically?
That's what it's for. Is it defines the AML BSA reporting requirements for OTC trading.
Okay.
That's exactly what it does. It's the only thing it does.
Okay, well, I can speak to Dubai, I can speak to that part of the world, my experience. But generally speaking, again, it goes back to the policy and regulation.
But large institutions now, even though it's not allowed openly by most of the banks, or not welcomed by most of the banks, still move billions of dollars every day into cryptocurrencies now, back and forth, right? And they find a lot of creative ways on how to do it. So you asked a very good question, and my suggestion is that maybe it will follow the standard hype cycle. So you need at least 10% of the innovators to adopt it, so that to change the system. So once the volume of these trades reaches or comes close to 10%, it's definitely going to change the whole banking system, and they will have to put regulation in place, one way or another.
Yeah, the largest trade is Bitcoin yen. So somehow some Japanese must be involved in this. Yeah. I think the question is, Japanese bank Japan has been supervising that development. It's a very good question. To what extent is it going to take an element of concern? Again, if you look at yesterday's report of the EIS, they don't seem to be too much concern at this moment. The question is, what level might it be?
What's the daily volume of Forex trade? Does anybody know in the world?
I think it's about 3 trillion.
3 trillion, so...
Five
And then there are cases basically in other industries, like for example, I know that telecom companies are working at the moment at how they could use, for example, blockchain and tokens to make the international settlement between each other and basically minimize, could I say, traditional payments and cost of those.
So if it's, I'm sorry, just it can be an interesting number. So if it's 4 trillion a day, let's take 4, and the volume of cryptocurrency trades is about. On exchange 12.5 billion. But with OTC, it's. OTC is probably 3 or 4 times that. Yeah, so we're talking about like 50 billion, which is actually very close to 10% already, right? 400 billion, yeah, so it's 10 times more.
I will give here another perspective. If about 3% of Polish adult population holds cryptocurrencies, it means that politicians started to recognize it as a kind of political power. So when there was some problem with Polish financial regulator, people started to demand changes for that. Actually, the situation started to change. The regulators started to be more crypto-friendly and wants to have some of the cryptocurrencies exchanges back to Poland, although they forced them to leave the country. And this is the power of people. This is the power of adaptation, social adaptation, of innovation. And if the innovation, if cryptocurrencies, blockchain will adapt, then people will put more pressure on regulators as well to change the law.
Let's have the final question from here.
So it might sound like a very silly question, but I think it's important. But when I lose my password, I can call a bank and sort of access my funds. If I lose my account number, I can call. We already know in Bitcoin, and somebody probably knows the number better than me, I think over 400,000 Bitcoins have been lost forever, right? People have forgotten their private keys. Unrecoverable total loss of Bitcoins that will never be recovered. So that's first. What's that? It could be as much as 2 million. As much as 2 million, okay, thank you. The other side is, so I'd definitely like to hear what's the recourse in cryptocurrency. And the other question is, we already know that the immutable aspect of Bitcoin has meant that people have encoded child pornography into the Bitcoin networks. We already know that, where people have researched in Australia and figured it out, and it's immutable. So my question is, given those two very clear problems, how do you see banks ever adopting any of this? Like, if I lose my private key, I'm done. And the only solution people give is, don't do a hot wallet, because then you can be hacked, so do a cold wallet. So then you print it on a paper, which can be burned, so you put it in a bank. You do a steel wallet. So there are like a lot of stupid answers out there, but I'm very curious to know what you guys think from banking.
If I may ask, this is the technical question. I mean, the last one. It's possible to recover the private key if you created that from some seed words. If you have your seed words stored somewhere safe, for instance, in a bank, then you could do this. And this is one of the services that banks could provide, although they don't, because they don't see this market yet.
If you keep your savings in golden pieces, right? You face the same problem, and so it's not the question of Bitcoin; it's the question of cash versus banking service. So there is a cash and banking services traditional banking system, but nobody yet built the same convenient service for the crypto world. But somebody will do this within the next months or years, and then you don't have this problem. And just one more thing I realized. If you have $1 billion in cash, right, and you come to a Swiss bank with 10 suitcases, even if you have like spells of blood and a little bit of cocaine remaining on it, they will be very, very creative on your KYC, and you can get all the services. If you make more than $10 million a year here in US, you can pay no taxes by establishing a trust, and then the trust owns the corporation, and then Caimans and BVI and all the stuff, right? But so it's not that it's not possible, but it's the question of it's too expensive, you know, to be above of this financial system, and it's just making the services available. You know, just equalizing the terms for everybody. So the Vietnamese freelancer need to have access to the same level of services and the same level of KYC and the same level of security than the guy with the suitcase.
And I'd like to add to that. I mean, you got to really. I mean, you're right on about the cash issue, and the majority of the black market globally is cash-based. So the argument that Bitcoin has anything in terms of percentage to do with illicit funds it's almost a rote argument. It's practically not even a discussion. Yeah.
Yeah, I would just add, I think, you know, given that you have a digital footprint, I think if anything can be solved, I think it's through the cryptocurrency. So it's cash. You know, this is why you have this whole movement, you know, on holding on to cash, just, you know, to be able to finance illicit trade. So if anything, you know, crypto should, you know, be a counterbalance to that element.
Ladies and gentlemen, it was a fantastic discussion, very hot topic. Let's applaud our speakers. Thank you very much.